Hello there. Happy day of the week. Don't know what day it is today. I have been asked recently about sales tax and income tax and how they're different. But it wasn't a question exactly like that. It wasn't a articulated question. It was more a question that came from confusion. I had a client who I had told them that their HST filing hadn't been done in 2 quarters. This is a client that I was doing a bit of catch-up work for, cleanup work for, and I said, well, they haven't been filed in 2 quarters, and so she sent me a screenshot of the CRA's website and said, this is what I got from my bookkeeper, from the prior bookkeeper, and it looks like they actually owe me money for my income taxes were definitely filed. And what happened was there's that confusion between sales tax and income tax, and that person is not alone. This happens all the time where we confuse business taxes. We think business taxes is just one thing, and we think, oh, maybe like I don't have to pay taxes until I reach $30,000 in my business, or I don't have to charge tax until I get to $30,000, or taxes won't come off my income until I get to $30,000. That $30,000 seems to continue to come up. But really there are 2 different kinds of taxes. And so I'm just gonna give you a quick overview of what those 2 are and how they work. So the first one that we're actually more familiar with, strangely, is sales tax. And that's that $30,000 threshold. So sales tax is a value-added tax, basically. So you charge it on your revenue, and then you're able to deduct the amount that you have to remit to the government that you have paid out on expenses. So if I collected $10 in sales and I had GST, for example, so GST is 5%, then I would have, in public is always embarrassing, 5 cents, 50 cents? I don't know what it is. Maybe I should do the math. I have a calculator here. So I have $10 in sales times 5%, 50 cents. So I have 50 cents that I've charged in GST. So I owe that GST to the government. But say in order to do that $10 sale, I had to pay somebody $2 to, I don't know, hand me a pen. These pens make a lot of entrances into these videos. So then I would have 10 cents. I have 10 cents that I have paid to this person in GST. So I have 50 cents I collected on my revenue, and I paid out 10 cents, which means I'm only going to owe the government 40 cents. That 50 cents minus 10 cents, 40 cents. So that idea that you really only pay, like you only remit the HST on the difference between your income and expenses. Now that's kind of an oversimplification because not all of your expenses are going to have GST on them. But that's the general idea of sales tax. You have to register if you reach $30,000 in revenue in 4 consecutive quarters. I know that's a year, but it's important to know that it's 4 consecutive quarters because it doesn't reset at the end of the year. So if it was like 29,000 at December 31st, then it doesn't like reset to 0 in January. It's, you know, you make your $1,000 in January, then you're probably going to be at that threshold, and you have to register. If you register, you have to charge HST or GST, well, both, sales tax, depending on where you are. If you register, you have to charge it. If you don't register, you can't charge it. So if you reach that $30,000, make sure to register. You can voluntarily register beforehand. But like I said, if you register, you have to charge it. And if you aren't registered, don't charge sales tax. The other one is income tax. That's the second kind of tax. And it's just like personal income tax, right? We work for somebody else. They give us a paycheck. They deduct our taxes. We have to do our personal taxes at the end of every year. And the business has taxes it has to pay too. So if you're a sole proprietor, then your business taxes go on your personal taxes. Like it's all the same tax return, and it all gets taxed together. If you're incorporated, then the corporation has its own little separate business baby thing. And so it pays its own taxes. It's got its own separate tax return that it has to pay. And so that is different than your personal taxes. There's a whole lot of other stuff, like complicated, how do you get money out of the company? How does it impact your personal taxes? All that stuff. I'm not going to talk about that, but it is important to know that the corporation has to pay its own tax. And if you're a sole proprietor, which means you're not incorporated, then your taxes go on, or your business taxes and personal taxes are the same thing. You have to pay income tax no matter how much money you make. I mean, personally, you've got all these credits and stuff, so maybe not, but there's no threshold. You have to like claim money that you make. It's not like you can make $30,000 just free. So I hope that clears that up for you. Sales tax is one of those things that is really not inherently clear. It's not an easy thing to navigate when you're just starting out. So I have created a PDF download of the 7 accounting mistakes small business owners make and quick fixes to stay out of trouble. And sales tax is one of them. For each one of those mistakes, I talk about what the problem is, usually how you got there, and then what the fix is. So sales tax is one of those. If you're interested in getting that free download, I left a link in the description. It's accountingmistakes.ca, accountingmistakes.ca. I hope you're doing well, and I'll see you tomorrow. Oh, hey, if you have any questions about that, definitely leave them in the comments for me. I'm happy to answer them. I'll see you tomorrow.